Welcome back to my YouTube channel. Today I'm going to spend time on mutual fund, how many funds you should have in your portfolio, and what are the implications of having different funds. Before I start, friend, let me take you back to a little bit of history. When I was at your age, maybe 25, 26 years, we didn't have so many opportunities. Mutual fund as a concept didn't exist. The first mutual fund which came in late 90s from UTI, and there were not many options. Today, you have plenty of options. In fact, the options are too many. So at one end we had nothing, today you have too many. As a result, people feel confused. Now, second thing which is very important is, let me tell you my own story when the mutual fund started. I have been a prudent investor right from the beginning. I don't know from where I learned, but I learned it because I had passion after doing my job, which was I worked at senior levels. But at the same time, I did have a passion for investing, and I kept on doing this throughout my career. Obviously, I was not doing at the cost of my job. I was lucky that I did too good in job as well as reasonably good in investment. So initially, the way we go on investing in mutual fund, the first fund came. The initial fund offered, NFO. The NFO, when it comes, normally the brokers, they persuade you to buy it, so you buy one fund. After some time, another fund house brings fund, you buy the fund also. And in that process, you accumulate so many funds. Second thing was happening that time was that commissions for mutual fund agent was very high. So many times people will push you to buy it because they return some money of commission which they get in first year. Today, the SEBI has rationalized and the distributors or the intermediaries, they don't get much money. And the advisor thrive on volume today. So as a result, what happens is you come across many advisors which, due to their own interest, they keep on pushing certain funds, and investor lands in having 15, 20, 25, 30 funds in the portfolio. Now the question comes, what should be the optimal criteria for having number of funds? So how many funds one should have? What is the best thing so that you can create wealth and then your funds keep on performing well? So I'll discuss on all these points today. So before I proceed, couple of pointers. Investing in mutual fund, which is ultimately investing in stock, is risky. So before investing, please do your own research or consult your investment advisor. The purpose of this video is purely educational. And I think investing in a stock market becomes very interesting if you have some knowledge about it. There are plenty of courses available in the marketplace. I have also brought a course for you. You can visit drbishram.graphy.com. It's very competitive rate, very low rate. I have put these courses. There is one course which is free. Please do that. Once you do this course, let's say in a day or two, which is about 1 hour 15 minutes video, I'll give you 50% discount on the package, which is already discounted 80%. You can compare the value of these courses with available in the market. Why I'm doing this? Because I want not many people to acquire this knowledge and really live a very interesting life where you have got the real freedom from financial worries, freedom from financial hiccups, and you prosper and enjoy your life the way you want. So let's get moving. So before I get into the mutual fund story, I would like to show you certain things. I like to take your attention to the savings. When I was at your age, as I mentioned in the beginning, the saving rate in India was close to 30%. Today, the saving rate is about 17-18% of the GDP. You see the red line here, gradually it has been coming down, and the consumption line, which is green line, has been going up. Well, consumption does help economy in terms of boosting the economy, but at the same time, if you really want to become wealthy, you really want to become rich, you have to sacrifice some part of it, particularly in the early part of the life. That is very important. So therefore, friends, whatever you are earning, it is very important that you start saving a large part of it as much as you can. I'm not saying cut down your requirements. I'm not saying cut down your consumption. But certainly sacrifice something so that you can create future for you. That is message number one, which I think I'd like to put here with some sort of humility and with utmost request to you that please do that. Don't spend every penny, don't blow every penny you earn today, because that is what is going to help you in future, and you can relax the way you like. So now the question comes, I have briefly touched upon why people start accumulating funds. I recommend, somebody else recommends, you read from some news agency, you see G Business, you see CNBC TV 18, and you keep on adding funds, and you have too many funds. It becomes a jungle of funds. Now, is it good? Certainly not, because certain funds do invest in the market, and there are good share patterns. And if you get into too many funds, what you're doing is over diversification. Typically a fund has 30 to 80 stocks. It could be as low as 30 and as much as 80. So depending on the object of the fund, like let's say large cap fund will typically invest in blue chips, a small cap fund will invest in upcoming stocks with high risk, but number of stocks can vary, but the prime consideration will be very similar. So from that perspective, the moment you buy even a single mutual fund, you achieve diversification. Because what happens is it is diversified across industry and you have got too many stocks. So therefore, number of funds, adding funds doesn't help. Secondly, there is option of buying the market itself. Like let's say if you buy Nifty, you buy some, let's say 30 stocks, a better average of 30 stocks. Similarly, a mid cap beach you can buy, which is mid cap Nifty mid cap. You can buy banking, Nifty, bank Nifty, what you call it. And there are ETF available, there's a mutual fund available that you can do that. I'm not going to discuss all these. So if you are really not want to get into mutual fund directly, those could be better options where you can buy these funds, the three funds, let's say three ETFs. You go on accumulating as and when you want, and they give a decent return. You can easily earn 14 to 15% return or 13-14% return over a period of time if your horizon is long. And then you can do a very good job in your job. But sometimes having more knowledge brings you excitement. In terms of knowledge is power. It could be in terms of financial power or whatever you can think of. Knowledge gives you freedom. So from that perspective, it becomes very important. So the question comes, how many funds one should have? There is not one answer. As I mentioned, you can have one fund, two fund, three fund. And recently, I went through an article in ET which mentioned that there could be, like this article, the optimal number of mutual funds that you should have hold in your portfolio. This article talks about at the end, if you look at, there's no prescription, there's no one thing which you can. But at the same time, it what it recommends is you should have 8 plus minus 2. In your portfolio, one should have in a portfolio 8 plus minus 2. My feeling is 5 to 7 funds could be good. Even 8 plus minus 2 is the upper limit, and more than that fund you should never have in your portfolio. That is for sure. So that answer, how many funds? So depending on, but number of funds also can come from your own objective. You may like to create one fund for each goal you have. Let's say you have to have a child, you want to fund his education after 20 years. So you can create a SIP, fund which continues for 20 years, and that is dedicated to that gentleman or that girl actually. The second could be for marriage, third could be for building a house or foreign trip or whatever. So if you have different goals, you can create goal-wise mutual fund. Or if you have too many goals, then you will end up with 15 mutual fund. Then what you do is, in the same mutual fund, maybe one or two, you create a separate portfolio for or separate account for each goal. That also will do. So that is one thing. Secondly, in today's market has become very complex. There are more than 7,500 funds in the marketplace. So it becomes pretty difficult for a person like even us, who spend good amount of time understanding and learning this, to have a good knowledge of all of them. So I can imagine your pain. I don't want you to certainly devote a lot of time on the stock market, because that will force you to compromise on your job, which is the primary source of your income, and you should never ever do it. This should be a side one. So for side one, it may be always good to have some sort of family financial advisor, as you have family doctor, and that becomes very, very handy. And friends, once you have that, then what you should do is, depending on your risk profile, study of your risk profile is very important. What are the option of investing in large cap, mid cap, small cap, or flexi cap, or multi-asset allocation mutual fund? So these 5-6 categories are very hot categories. There are many other categories, but these 5 categories could be very useful for you, and others could be a balanced mutual fund. And depending on your profile, you should sit down with your advisor and construct a portfolio for you. And that portfolio, once you say, look, I'm going to have, these categories of fund, then from the same category, don't get into multiple funds, because that will increase. I will show you how it keeps on increasing. the number of funds without achieving much in terms of requirements. What are the difficulties if you have large number of funds? If you have large number of funds, monitoring becomes difficulty. Non-performing funds remain in your portfolio, and that is drag on performance of the portfolio. Third thing is, it also retards the performance of the portfolio. So from that perspective, it is always good to have optimal number of funds, which let's say 5 to 10. Although the range becomes very large, but let's keep it 5 to 10 max. 10 max, 5 mil. That be the range in which you should operate. Having done that, when you choose a fund, I'll tell you, let's say you decide to add a flexi cap fund. Now, I will show you how the flexi cap fund of two fund house has got different profile and what you should be doing that. So here if I go to the flexi cap, there's a advisorcoach.com, there's a site which helps you in selecting funds. So here you go to MF Research, mutual fund portfolio overlap. So let's see, I'm going to show you overlap in, let's say I take a blue chip fund or large cap fund, equity large cap. Now here, Canara Debico fund is very good, Canara Debico blue chip fund. And then you have got, let's say, Axis blue chip fund. Now here, if you ask for portfolio overlap, what the software does is, once you submit it, it gives you these two, what overlap it has. And that gives you, see, this has got 85% of the Axis Bank portfolio is in the Canara Tobacco. So it's if more than 50% overlap, you should avoid. Because then what you're doing is unnecessarily adding two funds, increasing your complexity without getting anything about it. Now let's take another example. Let's say Flexi Cap Fund. Now Flexi Cap Fund, one fund which has been performing very good is SDFC Flexi Cap. And the other one is, which I like always, Quant Flexi Cap. It's a very aggressive fund. Risk profile may be different. Maybe I'll have another video on this. But I'm showing you today just the overlap of these two funds. So here, if you look at these two funds, you see here, the overlap is hardly anything. Here, portfolio overlap is just 4%. So, since their aggressiveness, their risk profiles are different. You may like to, if you are adding flexi cap, maybe you can have SDFC flexi cap as well as Quad flexi cap. Because in that case, you are not creating redundancy. Because most of the stocks, very large portion of this one, which is 97%, are unique these two portfolio. So friends, this becomes very, very important while creating a portfolio and then taking a decision. So I have showed you, should not have more number of stock in the portfolio. If you have more number of stocks already, have you seen this video, what you should do? So very first thing I suggest is, you look at the allocation. Ideally, if you have 5 or 6, let's say 6 funds in your portfolio, and each have got more or less same amount, that is good. Or sometimes you may like to vary, but varying makes it more complex in terms of return calculation. So depending on your profile, you can even have 3 lakhs in some, 2 lakhs in some, and things like that. But you may have fund which has got 20,000. That is not creating any contribution to the return. So get rid of those funds. Secondly, look at the overlap of different funds. And if you have 2 funds which are overlapping a lot, decide to keep one and get rid of the other fund. You can bring back that allocation to your fund, to the first fund. Third thing is, whatever you allocate in these funds, you create some sort of goal for your return. Let's say my goal is to, because I had a option of selling some real estate and investing in stock or equity market. So I do decide some portion I put in stock, some portion I put it in mutual fund. And then mutual fund I should get more return than if I had invested in a real estate. So what I decided was, I did some calculations based on some assumptions, and I found that if I'm able to earn more than 13-14%, then I'm doing better than real estate. So in that case, my bottom line becomes 14%. So what I normally do is, every 6 months, I'll keep on looking the return, CAGR of different funds in the portfolio. And for consecutive 2 years, if I get CAGR of a fund less than 14%, I'll get rid of that fund from my portfolio. So I encourage you to choose your own benchmark sort of for return and keep on looking at your fund regularly. Friends, I have seen many investors, they just put in the fund. If you go with some middleman or middle advisor like us, and then we'll give you every quarter update on your fund, how your fund is performing, how the CAGR. Then you can discuss with them and then do reallocation. But many times what I've seen is people do invest and they forget about it. It may not be very good because all funds forever are not the best funds. The best funds of today may not remain best fund for tomorrow. Therefore, it becomes very difficult to continue in something that will cost you heavily in terms of return on your portfolio. So these may be some of the tricks of pruning your number of funds from your portfolio. And if you do that, friends, I think you can enjoy the mutual fund goal. And if you have some knowledge about investing in stocks, then you should always keep some money for investing in the stock, because that is where you do your own performance and benchmark against your funds which you have in the mutual fund. But before you get to a stock, my strong recommendation will be that do some understanding of financial market that will brighten your career, even though you are an IT grad or NIT grad or some technical education guy like us. But even being a technical education, you should have some financial education, because without that, your life will never be complete. So, friends, it becomes very important that you do that. And then accordingly, you take your decision. So I hope in today's video, what I have done is don't have too many funds. What is the mutual fund? What is the optimal number? It could be 5, 6, 7, maximum 10 and minimum 5, based on certain recommendation and my own recommendation to 5 to 10 funds. Second is, I also showed you how to look at overlap of a fund using advisor code. There are other softwares also. Don't invest in multiple funds which has got sort of overlap, because that doesn't add any value and unnecessarily clutters your portfolio. Third thing I said, even though you have more number of funds which historically you accumulate sometimes due to various reasons, review it and then prune it. Fourth thing I said, please do review your portfolio at least once in a quarter. Don't do it every day. Once in a quarter, once in a 6 months should be okay. And if you don't have that option to know what your CAGR is, depend on somebody who can help you. And passing some money which comes from the mutual fund house, you must be investing through some bank portal like HDFC, ICICI, etc., etc. They get that money. Instead of doing that, if you get to a good advisor with whom you can, develop some sort of link like a family financial advisor, you have a better life and you can have a better time. So I hope you like the deliberation today. If you like it, don't forget liking it. Please do write your comment. Forward this video to your friends, colleagues, and stay engaged. Thank you so much for your time. Jai Hind, Jai Bharat.